What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex. We're going to be going over the top 5 stocks to watch for next week to play options on. So really nice option strategies here, and we got some really good plays. It is a bit of a tamer week as well, so we're not seeing any crazy companies. Obviously, we got some big name companies like FedEx, Adobe, Costco. But we're not going to be playing options on those stocks because those are higher priced stocks and it's just going to be a little bit more expensive for the average viewer. So the first stock we're going to be going over is actually a medium price stock. It's Lennar, and they do home building. So this stock is at $100 per share, and they've been doing pretty well, especially with this pandemic. A lot of people are looking at the real estate market, and they've been doing pretty well over the pandemic. As you can see, earnings have been steadily growing, and they anticipate some really nice earnings for this upcoming quarter. So they do report earnings Monday after the market closes. So what we're going to be doing is, this is probably for larger accounts. We're going to be selling some cash secured puts on the stock. If we take a look at the charts, there's a really nice resistance at this $95 strike. So we're going to be trading some Lennar options, going to sell, going to put, and you can either do the September 24th expiration or the October 1st. You're going to be collecting a bit more premium for the October 1st, but the goal here is just to get in and out pretty quickly. So we're just going to be doing a weekly option. And what we're going to be doing is, you could either do the $95 strike or the $96 strike cash secured put. Both are going to give you over an 80% chance of profit. So really safe strategy, but you're not really going to be collecting too much premium. As we said earlier, people with larger accounts want to do this trade preferably. So you're going to be collecting either $78 of premium or $95 of premium for about just under 10K collateral, which is going to be almost a 1% return in a week, which is not that bad, especially if you have larger accounts and want a safer trade. So the next stock we're going to be going over is going to be Aurora Cannabis. So really nice stock right here. Pretty cheap stock, only $6.50 per share. All-time highs of the stock was almost $20 per share back in early February. But ever since, it's been pulling back, and a lot of people are watching the stock as more and more states are legalizing the use of marijuana. So we're going to be taking a look at the charts, and we're also going to be selling some cash secured puts on the stock, ACB. So nice resistance here, or support here, at the $6.50 mark. So we want to sell some cash secured puts, probably around the $6 price point. So let's go to the sell put. And obviously, since this is a cheaper stock, you can just buy and hold shares if you're pretty bullish on cannabis. So this is a really nice pickup for you guys. So we're going to be selling the $6 cash secured put expiring this week, this Friday. And we're going to receive $16 of credit, which is actually, it seems like it's not that much, but it's a pretty good return in a week, considering you only need to put down $600 of collateral. So it is a pretty nice play. 76% chance of profit. Take a look at the calculator here. Take a look at the rate of return. It's going to be $16 to buy $600 collateral. It's going to be almost 3% in just 1 week. So not that bad of a play. Really safe play. And the reason why we're selling options is because during earnings season, the premiums for these contracts are going to be a little bit higher. Implied volatility is going to be running up, which means the contracts are going to be inflated a little bit. So the best way to play options during earnings is actually to sell cash secured puts, or if you already own stock, sell some covered calls, and you can collect some really juicy premiums as we're seeing here. So that's going to be Aurora Cannabis. The next stock is going to be Blackberry, which reports earnings after the market closes on Wednesday. So Blackberry, another short squeeze stock that we're really looking at, sitting at $10 per share. And a lot of people are pretty bullish for another squeeze for the stock. So if you want, you could just buy and hold shares, sell some covered calls. That would be pretty good strategy. Or we could take a look at the charts and see what we have here. Nice support here at just under the $10 price point. So we want to sell some options just under this $10 price point. Probably the 9 or the 9.5 strike. And remember, this selling cash gear puts is basically a win-win strategy. You either have the contract expire worthless if the stock stays above your strike and you collect the premium in full, or you end up buying the dip because if the stock drops below your strike price at expiration, you get to buy 100 shares at your strike price, which is a lot safer than just outright buying 100 shares of the stock. So we're looking at either this 9.5 or $9 strike. Both are going to give you a pretty good return on your capital, really safe strategies as well. So next stock is going to be, Progress Software, which reports earnings Thursday after the market closes. And we're watching this stock because it's been pretty flat the past year. As we can see, it's had some ups and downs, but overall, stock price hasn't really moved much, especially in the past 3 months. And we're really going to look forward to selling some cash gear puts on the stock as well. So we can see here lots of ups and downs here. We're really looking forward to another great earnings season for the stock. It's a software company. They don't have too much in terms of the expiration date, so we're going to do the October 15th. And the main goal of this is to open this up before they report earnings and then close it probably the next day. Because remember, after earnings is reported, implied volatility gets crushed because the earnings is reported. There's no more uncertainty, which means automatically premiums on these contracts are going to go down in price, even if the stock remains flat or even if the stock goes slightly down. So what we're looking forward to is going to be this $45 strike. The goal with this strategy is going to be getting in and out within this week, even though we have an October 15th expiration date. But if you're bullish on the stock, of course, you can continue holding. But this is going to be quick in and out for Thursday after earnings. So that's going to be that. And we also have Cognizant Software, which actually reports earnings before open on Monday. So you probably won't be able to get into this stock, but this would be a good one to probably play call options on, especially with how flat it's been in the past. It has been running up in the past 3 months, but call options would be good because implied volatility is pretty low on the stock. Premiums aren't that high, as we can see, $80 for a $30 call option expiring October 15th. So really cheap price call option right here. If we take a look at the charts here, CGNT, it looks like it's about to be breaking out right here. Really strong resistance here at this $28 price point. And on the market last Friday, it does look like it's being pretty bullish and breaking out. So really nice play there. But fortunately, it's probably too late to get in. But if you're bullish on this company for the long term, now would be a good time to probably buy some call options, especially after earnings when the stock, when the implied volatility gets crushed. Because remember, the premiums are going to be a bit lower. So that would be the best time to buy options. But prior to the event, you want to sell options. So that's about it for this video. Top 5 stocks for earnings to play options on for next week. Like the video if this helped you in any way, and of course subscribe to the channel. It helps out a lot. Thanks for watching.